A way to make a living. Crypto is on the rise, making that dough in the crypto paradigm. Watching it go, buying low, selling high. Riding the wave, I'm here to stay, living in the digital age. No thanks, no fees, just decentralized. It's crypto paradise. Ooh. No thanks, no fees.
Alrighty, let's kick this thing off. Good morning from Paradise Surfers. My name is Crypto Amaru, joined as always by Nick the Crypto Hitman. It is Tuesday, January 13th. CPI data, the inflation data is in. We will parse that data and give you our thoughts on what this means for our beloved risk assets, which look a little bit green this morning. Of course, we'll cover the charts. We have Clarity Act news to share with you guys, some analysis around whether we think the bill is going to get passed in the near future here and what that will mean for the markets. And of course, the big story last night, Eric Adams, the former mayor of New York City, decides to launch a meme coin, ticker NYC. Does incredibly well out of the gate, by the way. I was pretty impressed with that. And then boom, he rug pulls it. He literally pulled liquidity, $3 million. I mean, I don't know what the hell this guy's thinking. I hope he goes to prison. So we'll get into that story as well. I thought that's pretty crazy and ridiculous. People are still buying these celebrity memes after been beaten upside the head with all of them previously. But yeah, I don't know if you got a chance to check out the inflation data, initial reactions to that, and then we can go from there.
Yeah, I think you were saying the inflation data came back as meeting expectations, so not a miss and exactly what they were thinking, and it was the exact same as the last report we had, I believe it was last month. So they're saying inflation has been flat over the last month. We do know that Trueflation data shows it going down over the last month, below 2% on both metrics, but nice to see 2.6 met expectations, flat inflation, going into what probably would be even lower inflation reading in their next month reading based on what we're seeing with Trueflation.
Yeah, so we came in at 2.7% on the CPI data. If you strip out the, quote, volatile gas and food, you get the core CPI, which came in at 2.6%, pretty much at expectations, like Nick said. I'm of two minds here. First of all, I've come around to the position that the Fed will not be cutting rates. Not with the pressure, not with this supposed investigation that Powell's now under related to the cost overruns on the new Fed building. Not with the rest of the Fed governors sort of digging in their heels and saying, we need to wait and see. So I don't know if we get the rate cut, but I don't know if it matters as much as maybe we've thought in the past. First of all, the general trajectory is going to be lower rates. I don't know if the January cut or lack thereof is going to cause some big market crash or anything like that. I don't think that's the case. If you look at the rest of the markets, look at S&P 500, I think hit another all-time high yesterday, NASDAQ as well. And we got crypto in the green today. So I think we can grind up. I think we can have a bullish and green January, even in the face of no cut at the end of the month here. So I'm kind of coming around to that. We'll have to see if it plays out. But you know, I guess what are your thoughts? What's your expectations for the end of the month here, and even Q1 more generally for risk assets?
I mean, we talked about how Trump pushing on him, I think, is a net negative, and then also we talked about them having another out based on some stuff that's happening at the end of the month. So maybe they can be like, oh, we need to wait and see, and we'll decide in February or March. But I'm still going to stick with the interest rate cut. You know, this inflation data here, the meeting expectations, pushes on inflation going down, which is kind of what their core objective is. But like you said, we did talk about some of the outs. Trump pushing on him. He could put his heels in just because. And again, in his speech, he says, "I'm doing it for the American people." So if he does it just because, he's really lying to himself and lying to everybody in that little video he put out. So we'll see. It's you're already going to the poly market side here. You're giving up on it, but I'm still sticking with the 0.25% basis cut here in January 27th. There is a couple outs that we talked about, and I'm not going to change my opinion on that. You did also mention Eric Adams, the former mayor of New York City. Never did I think that this guy, number one, would launch a crypto, but number two, that I would almost be missing this guy. Because now they got Mandami. My God, and that guy is an absolute joke. His first day, right before getting into office, all of his videos are begging for donations. Wait a second. I thought you had all these great plans, and socialism works so good, and you got all these tax dollars and tax the rich. Why are you begging for your voters, who are all the peasants, presumably, because if you own any asset, you're not voting Mandami. Why are you begging for them for $5 million, then $1 million, then $2 million, then $4 million, and then raising bus prices? That's interesting. Almost seems like that's already not working before it even started. Anyways, Eric Adams here, who I thought was a terrible mayor, but it's better than Mandami, launched his own meme coin last night, NYC. You didn't see us posting about it because we are not chasing these things. If Trump can't create a winner, if Melania can't create a winner, well, then how is this bum going to create it? And he didn't do that. Same strategies we saw on the other ones. I thought some people went to jail for it, so I'm surprised that other people are trying to do it. But the coin immediately went to $500 million market cap, and almost immediately, then their very next candles, liquidity was pulled. They're saying it was from the mayor, but we know that he didn't do that himself. He has people on his behalf doing this stuff. And it went below $100 million market cap instantly. I'm not sure where it's at now, but once Ian is talking, maybe I'll pull up the ticker and we'll see where it's at. But they're saying that Eric made nearly $3.5 million from the scam meme coin. The biggest reason people have stopped taking our industry seriously. Pretty crazy that the scam is run so short and so bad that getting a $500 million market cap, when you have the ability to snipe all the tokens, you're still only able to make $3.5 million when you pull all the liquidity, because that's just not the way you're supposed to do these things, and it's not a true $500 million market cap when it goes straight up and straight down in the blink of an eye.
I thought we were done with these celebrity meme coins after the Trump rug pull, let's call it what it is, the Melania rug pull, the Argentinian one that we had last year. I mean, how many times, guys, if you're in the market, how many times do you have to get beaten upside the head, rug pulled, raped, destroyed, before you say enough is enough? I'm not going to buy the celebrity meme coin. So, obviously Mayor Adams, I look at him as being culpable in this. Of course, the insiders, the, trenchers, the degens who helped him launch the coin, because like you said, I mean, there's no way he had the wherewithal and the knowledge to actually launch a meme coin, which isn't that complicated of a thing, but he'd have to understand how to add liquidity,
He was the mayor of
token,
city.
all these. I mean, these things are, it's not rocket science, but the dude doesn't know jack shit about Web3. Let's just be honest. So he had people helping him. They're culpable. But then, if you are the guy who bought into that green candle, thinking, oh, you're going to get rich quick, you're also culpable. You need to look yourself in the mirror and wonder why you're spending your time aping these celebrity coins after you've been raped so many times previously. Come on, guys. Come on.
Yeah, I mean, look at this. You had literally 10, 20 minutes to make money. You would have to buy in the first 10 minutes to be able to even have a chance of selling for a profit. And then massive liquidity pull, the FUD, blah, blah, blah. Now it looks like they have some kind of market maker, because this is orchestrated. This isn't the market doing candles like this. 5-minute candles that are equaling each other out and slowly grinding higher, as there's no real interest. But if you have that capital there, you can put a market maker in place. So does it see another run? Maybe. This is organic, quote unquote, from sniper bots and retail seeing it on their feed and FOMOing in. This is some kind of market maker bot. It's just too clean, and the plus minus for every 5 minutes is just too perfect. So I wouldn't be touching this. Again, it does look like they have a market maker, so they haven't completely abandoned the project. Maybe they don't want to go to jail, so maybe you do see another rally or a pump. But at the end of the day, this isn't going to be anything meaningful. Former mayor of New York City, and when New York City and New York are the most strict crypto places in the world, really, I mean, you can't even use Coinbase in New York for the longest of time. So I don't know what the idea was. I don't know what the plan here was. And the timing's also terrible with Ethereum below 5,000. He probably could have made $35 million off the scam if he would have waited till ETH was above $5,000.
You know what's interesting? I actually retract my previous statement where I was denigrating all you degens for aping into this. There is apparently only 778 holders. So it's not like 5 or 10,000 or 20,000 people aped into this, unless we're not looking at the right one.
No, this is it. 133 million market cap. There ain't
Yeah,
another NYC.
778 holders. It's like nothing. I think Surf has more holders than that.
That's less than the Surf token over on Pulse Chain.
So my guess is this is just completely manipulated, all insider, whale games, just bullshit, and now they're just trying to market make the price and the chart go up a little, grind higher, maybe trap some poor degens in here. Anyway, stay away, guys, stay away. I just hope that we have to have some legal repercussions on these celebrities launching meme coins that absolutely wreck people. And maybe this is a good segue into the Clarity Act, which is making its way through Congress. We may have some news to share around that. I don't know if the Clarity Act specifically targets or sort of encapsulates the manipulation and the rug pulls that are happening around memes. But this has got to end. This has got to end. We need to see some sort of repercussions. If Eric Adams, in fact, stole, let's just call it what it was, $3.2 million. Perhaps he's now taking that money, he's putting it back in the chart, using it to market make. I don't know. Maybe we'll hold off on judging at this early hour. But if he, in fact, just is going to take that money and be like, that's my money now. Like, no, dude. There needs to be lawsuits. There needs to be some legal repercussions, because this is just crazy.
Yeah, I mean, I wonder how, what would be the regulatory guidance on that? Is there a certain intent you have to prove when launching a token? Is there a certain time horizon you have to vest your own team tokens? It's a muddy water of how you actually regulate it. Like, granted, we launched the Surf token and it's doing its thing from 10,000 to 3.6 million. It's at like 200,000 right now. If we sold, people would hate us. Would it be criminal? I mean, we ran it for over a year. Not saying we're selling, guys. Surf token's living on for cycle after cycle. But again, it goes to the fact of, if you're going to put regulation on meme coins, token project launches, whatever, what is the criteria for effort and money put into a project that means it's not a scam? Is it a time thing, a vesting thing, number of hours you put in, number of money you put in? That's where you get very gray area, and why I think it's very hard to regulate these things without really killing the overall industry and dampening out the builders that we saw in last cycle or the last administration. It was hard for any builders. We didn't want to be our face of a token because you just didn't know. There is no clarity there. So I almost like this free-for-all Wild Wild West like we had in 2017 versus the completely nothing and scared to go to prison for anything that we saw under Biden.
Yeah, that's a very good point. This is a gray area. It's not an easy thing to regulate. You have to let the free market sort of do its thing. I just think, if you're talking about launching a coin and within hours,
that's
literally pulling millions of liquidity out of the LP pool, it's one thing if the price goes up and down. But if you're pulling money out from that LP, that is very much veering into the realm of just outright scam, which is different than, I launched a project and it ultimately failed because of XYZ. It's hard to run a crypto project, blah, blah. That's look, we get that. I don't think anyone wants that to go away. It's just dude, he pulled liquidity within hours.
Not even. It was literally like the sixth candle on a 5-minute chart.
And that, by the way, that never happened on Trump or Melania or I think any of these others. I don't think any of them was liquidity pool. You had insiders selling a lot, sure.
Right. Sniped it all and then just dumped it all. Yeah.
Yeah, but that's a little bit more gray area. I just think the rug pull. And let's see what happens. Don't touch it, guys. I'm amazed to see only 778 holders. I guess people didn't really care. Maybe the market has wisened up, which is
what crypto bros like the former mayor of NYC? What crypto bros like that guy? I mean, at the end of his administration, he finally woke up a little bit, got a little bit of a spine, and understood that illegals were bad, and getting himself to the moderate side and embracing Bitcoin a little bit. But it took you quite a few years. Your city kind of fell apart under your realm. So it's like, what crypto bro wants to support a Bitcoin guy who literally hated it forever and then finally started coming the way of moderate when the left got really lunacy? You let things go, you're the part of the problem here. So why would I support you?
And now NYC, I think, has even a worse connotation. You use that ticker NYC, and if you're a crypto bro, you're probably thinking Mamdani. now,
Right.
right? Because he's the face of New York at this point, for better or worse. So I don't think there's anything attractive about the narrative, the coin, anything. Is just stay away, guys. Just stay away. I know you will. I know you guys. Anyone watching this show is too smart to touch this garbage. There'll be plenty of other opportunities here as the market hopefully heats up throughout the end of January and into the remainder of Q1.
Yeah, before we hop to Ethereum and Bitcoin, here is your mom. Remember yesterday we saw the rotation from your mom to DTGC. I said that is a buying opportunity on your mom if I've ever seen it. It's up 3.39% today, but up 0.0482, which would be, I think, about another 2% since our live show. So up about 5% since the live show. Shout out to you if you grabbed that one. That's one that we probably will talk about in the future due to its LP bonding with PTGC and other core assets. All the liquidity is burnt, so you can't get rug pulled by the former New York mayor over there. And they have LP bonding to PTGC and all the blue chips as well, which we like to see. Plus, your mom is a good meme. When things come back, you can make AI make redheaded, sexy girls all over crypto Twitter. And, of course, they're going to love that because who doesn't? I mean, literally, my Twitter feed is all these OF girls talking about, Grog, put me in a bikini. It's like, what is society becoming? Pretty crazy. But, play the cards that you were dealt, I suppose, and hopefully make some money while doing it. Let's look at Bitcoin and Ethereum here. Bitcoin, oh, baby, up to $92,551. Higher than the high print when Michael Saylor and MicroStrategy, I put them together. I guess they are one and the same. Bought $1.2 billion over the weekend. We got to 92.5. We're currently at 92.580 with a high of 92.6. What do you know? So far, looks like, well, exactly what we've been talking about. Higher lows, a breakout momentum move above the moving averages, surged us higher. A retest in the moving average, and what do you know? Another higher low, and we are working higher. Even in the face of stocks doing iffy today, Polymarket says the Fed isn't going to cut rates later in January, and we have open doors on maybe a black swan because everybody's talking about World War III again now because we sniped off the dictator of Venezuela. We're talking about taking Greenland, and now the Colombian president is taunting Trump. That's a stupid idea, my friend. I've been to Colombia. Beautiful place, beautiful people, lots of drugs, and a dictator there in his own right. So I don't know if I'd be taunting Trump. I would just shut up and keep living your life. But, I gave you the warning. Anyways, Bitcoin looking good there. Ethereum, $3,142 is underperforming Bitcoin here, at least in terms of what the peak was when Michael Saylor bought over the weekend. It got to 3,200. Currently, it's at 3,142. But again, same course of action. Higher lows, momentum breakout above moving averages, bounced off the moving average, put in another higher low, and finding some gains here today. Neutral on the indicators, so you got a lot of upside here on Ethereum, and I know we would love for this to get to overbought again, which would probably send you in prices towards $3,500 to $3,600 ETH, and then we can make some decisions whether or not Hexbull is right, and if this is all just a big bear trap.
I don't hate these charts. I do not hate the Bitcoin chart. I do not hate the Ethereum chart. We are consolidating. It's a slow grind up. It is boring. Maybe it's a little painful for the impatient out here among us in the market, but much prefer this to market nuking.
To this.
Right? At least we're seeing a little signs of life in the trenches. My portfolio is slowly going up a little bit. It's a little bit green. Not full on euphoria. I'm not jumping for Julie. I'm not waking up and checking my phone at 6 a.m. Oh my God, am I so rich today? No, but at least I don't feel bad when I look at my portfolio. I think Solana's also doing pretty well off the lows too. Maybe we check the Solana chart. I think we're at like 140 something on Sol. Yeah, so look at that.
142. And in hindsight, we were talking about this parabolic move on Solana. And what happened? We didn't talk about this too much because we didn't really have positions in Solana. We weren't giving you trading positions. But we were talking about this parabolic move that it was making. And it broke the parabola right here. And then it almost retested the parabola. And now we've gone down since. If you look up what happens when parabolas break, there is like a set percentage in which they drop. And I'm sure it was close to it based on this drop down. So, in hindsight, if we would have an open trade, we would have talked about it more. We didn't really have an open trade or any meaningful position besides some, marketing tokens or sold some meme coins over there, whatever. When it broke this parabola after it's run to $245, it got volatile. You got the bounce, so another chance to exit that almost ran into the bottom of the parabola before, this big drawdown that we saw. So that is pretty textbook when you're looking at TA. We just didn't look at Soul Chart very much, but we did have this parabola already on there. I don't change any of my drawings, so I don't even know the last time we clicked on this, but this was the drawing that we had on the chart.
Well, what I like about it too is when Solana's going up, the meme coin trenches sort of started coming back to life a little bit too, right? We just had Spin Pump, a project we're working with. They launched. There's been a lot of runners. I mean, this White Whale one has done incredibly well, like 0 to 150 million over the past month or whatever. And there's been a bunch of other pretty decent runners on Solana, really in the past like 2 weeks. And I think it's no coincidence that you see Solana grinding up a little bit off the lows of, what we hit like 125 or something. Now we're on 42. Sure, slow grind, but at least it gives the trenches a little bit of life here, which I'm always happy to see that. So, and we also hold a little bit of Solana. I know people care about it. So happy to see Solana do well. Bitcoin, Ethereum, a little grind up here. Nothing's going crazy. Maybe Monero. Maybe Monero's.
That's what I was going to talk about. It looks like Zen up 15.8% today, back above $10. So that is a privacy sector coin. Is it doing it on itself? Because ZEC is negative on the day. No, it's doing it on the back of Monero. Monero rotation is underway. Is it just the Zcash bros recycling money going from ZEC to XMR? Maybe up another 6% today. I mean, look at this chart. We told you that 2026 is going to be a year where privacy narrative continues to find itself in the headlines. And Monero, low-key, since August, finally putting in some big gains. Remember, Monero in the low in August was 232, got to 440 when ZEC was exploding. Zen did a 6x or a 7x. Monero just slowly did its thing. And now that people over on ZEC, whether it's the devs giving up, whether it's the transgender video that turned people off, whether it's the tech that is turning people off, I don't know. Pick your choice. Monero just played catch-up in a big way, going from $446 to $670 just over the past few days here. What do you think? Do you think this extends? Time to cool off? I don't know. It's a privacy sector. Don't have big bags of it. Might still have a HODL bag on a wallet. I need to check from like 2017 because that was part of our HODL portfolio back in 2017 along with Bitcoin, Ethereum, and some others. But I do like it for our Zen position and putting it back to double digits. And I think it does prove us right on our narrative that privacy is important. Privacy has some clarity, and privacy will play a role if we're correct, and this is a 5-year cycle and not a 4.
Yeah, I think this got room to run for reasons you stated. Also, you compare it to Zcash. The fatal flaw on Zcash was it was reliant on these individuals who were, quote, running it. Apparently, a bunch of transgender types, a little bit unstable perhaps, and they had a big fallout and a blow up. And apparently, like half the team quit. And that's why you saw Zcash crash. Monero doesn't have those problems. Monero's founder is anonymous and hasn't been active in like 10 years. There is a community around it. There's builders around it. But there isn't that risk of the team sort of fucking off and rug pulling for let's call it, for what it is. So I think it's got room to run. I also like that it's not listed on many of the big centralized exchanges.
It probably was in the swath of privacy coin delistings under the Biden administration.
Correct. And I know there's a lot of centralized exchanges that continue, they don't want to touch privacy coins, which on its face you might say, well, isn't that bad? Retail can't buy as easily. Perhaps, but it also reduces the risk of manipulation with market makers, leverage trading, and so forth. So I think it has room to run. I think it's got legs. The privacy narrative is not going anywhere. And if we we continue to see Bitcoin doing okay, Ethereum, whatever, people will buy into the trend and the narrative, and privacy continues to be a strong one.
Yeah, and before we hop to Hexbull in the chat box, we do see BMNR back above $30 to $31.26. Remember, we were buying down there around 30 and 32. We got SBT back above $10 at $10.34. Remember, we were buying that at like $8, $9, and $10. So those are up. And remember, they continue to buy and earn more Ethereum by the day. Their MNABs are still at a discount, meaning those are screaming buys if you believe in Ethereum. And my gosh, the info just came out for Thomas Lee and Bitminer. They are still sitting on something like $900 million in cash. They just bought more Ethereum. They're staking hundreds of thousands worth of Ethereum every day. And if Sharplink Gaming is making, $1.5 million a week in compoundable distributions in the form of ETH, I can't imagine how much BMNR is going to be making. They're going to be making like $5 million a week with a company that has overhead of like 3 people in the form of ETH that they're looking to compound. That is literally One of the both most profitable businesses in existence, even with Ethereum at $3,500.
Yeah, man. Glad I hold up.
And it looks like Crypto Amaru just dropped off. Now he's back. Go ahead. Can you talk? Oh, can't hear you. Microphone muted. Change your settings. We'll go over to Hexbull here. Hexbull says, Moon Bros, what is the big bill everyone is talking about that is being voted on by the Senate? Something about exchanges no longer being able to wash trade coins they don't own. If passes, we will make the right Bitcoin rally to form the right shoulder on the big head and shoulders pattern, then sell off into full-blown bear market. Bitcoin target of $45,000. Well, we'll talk about that, Bill. Was your bear market target always 45 or was it 40 before? Are you slowly rising it over there, Hexbull? What's going on? And I think if we do make that bearish right shoulder that you're talking about, you would be around $110,000 Bitcoin. Correct me if I'm wrong. I believe this is the Clarity Act in which you were talking about, posted by Dan. Whoa, the Bipartisan Digital Asset Market Clarity Act just came out for Thursday markup. Structure and clarity are coming, and here are some key points. Number one, network tokens aren't automatically treated as securities anymore once certain conditions are met. That removes the biggest overhang on listings, liquidity, and capital. This industry is waiting so long for this. From there, number two, staking and airdrops. Programmatic, rules-based distributions aren't securities by default. That's a pretty direct reversal from the direction things are heading. That is absolutely huge for pre-sales, huge for airdrops, and huge for passive income seekers like ourselves who utilize DeFi to hodl onto their bags and create yield via staking metrics. Number three, SEC versus CFTC clarity. It finally draws a cleaner line between the SEC and the CFTC. Securities stay securities. You can't say it's a security and then switch it. You can't say it's a commodity and switch it to a security. You can't say it's a currency and switch it later down the road. Digital commodities get commodity treatment. Institutions need that clarity before they show up. They're already kind of showing up, though. We see that with Bitcoin ETF, Ethereum ETF, Solana ETF is coming, BNB ETF is coming. But I guess he's referring to this more for the broader crypto markets and for Web3 tokens, whether that's a reward token, staking token, NFTs, collectibles, whatever it may be. And lastly, number four, builders and self-custody protected. There's also real language protecting builders and self-custody. Writing code doesn't make you a broker, and holding your own assets is still your right. This is going to be a crazy week watching how this plays out. This one right here was already proven in the court of law by Richard Hart when he was really the first crypto founder to beat the SEC as you sacrifice with no expectation of results, and he holds 90% of those tokens. So we've already seen this happen in court, and it went over flawlessly, and maybe he will be cited in this bill. I don't know. That'd be pretty cool because he was one of the forefront guys to fight the SEC, win the SEC, and prove multiple of these points in the court of law.
I am so damn bullish on this bill. First of all, it's going to get passed, guys. There has been news breaking recently. The big fight was between the banks who did not want stablecoin holders to be able to earn interest on their stablecoin holdings. Surprise, surprise, banks don't want competition for their savings accounts and the shitty APY they provide over there. And Coinbase is on the other side of that saying, well, we should be able to provide our users yield, and it's going to push innovation forward and makes the banks want to compete and do a better job. And I agree with all those things. Apparently, they're coming to some compromise, and they're saying that just holding the stable coin will not be able to earn you yield. But if you do something productive with it, perhaps you're staking it, using it within DeFi, okay, now you can earn yield on it. So perhaps Coinbase will still be able to offer you that 5%. I think they offer 5% on your USDC holdings if you have some kind of enhanced account like I have with them. I think they'll probably be able to continue to do that. But your average just holding, you're not just going to airdrop for holding Tether in your wallet. You know what I mean? So it looks like that's going to get resolved. That was the big sort of fight that was holding up the bill. And outside of that, I mean, this is nothing but bullish, guys. This is nothing but bullish. If you're a builder, you're now not as worried about the SEC coming after you for building a product and building and launching a token. But the biggest thing I think is let's just Go back to the name of the bill. It's the Clarity Act. This provides the clarity that the institutions needed to be able to say we are going to invest hundreds of billions or trillions of dollars into Bitcoin and Ethereum. That's what this is all about, guys. So once you get the clarity, once this is passed, and we're not the only people saying this. You have a lot of very rich and powerful and connected people saying exactly the same thing. They're waiting for the Clarity Act to get passed, and then they're going to start deploying capital. And this is, guys, this is how we get to $1 million Bitcoin over the next 10 years.
Yeah, and here's the biggest, the biggest thing too with all of this. If you see live on X, I see a lot of crypto, but I see Marcellus Wiley who is talking about sports. 615 people are tuning into Marcellus Wiley to learn about sports, talk about the football game that already happened last night, talk about what's going to happen in the next round of the playoffs. Well, you know what none of those people are doing? None of those people are getting financial literacy, educating themselves, and or setting themselves up to make money from the time that they spend on Twitter or YouTube or whatever it may be. So the fact that you're willing to listen to us ramble about digital assets, and then maybe you go to Randy Hipper or Bitcoin Ben or Wolf of Wall Streets, you're educating yourself on something that could potentially make you a lot of money and has made us a lot of money in previous cycles versus listening about yesterday's sporting events. Now, I like sports, don't get me wrong, and I do some sports betting, but I'm telling you, droning on, listening to hours and hours of sports podcasts, those people are getting nothing done but being able to small talk a random dude at the local bar. So congratulations to you. Give yourself a round of applause for learning about finance, for understanding what's going on in the economy, and understanding things that can benefit your wallet, your family's wallet, and your future. Just wanted to say that real quick.
Yeah. I don't want to talk about football anymore either because my Eagles are out and I'm still depressed.
They look terrible.
I'm depressed about it, but no, in all seriousness, you're absolutely correct. The challenge I think we have as an industry is, look, it's not as if Bitcoin is an unknown thing. I think a lot of people still perceive it as very risky. They don't want to bother to learn about it. So it's kind of a lack of imagination. It's a lack of curiosity, which of course is another way to not build wealth over time. But the reason why I'm actually not super worried about that fact, assuming we get the Clarity Act passed, which I believe we will, assuming these institutions continue to come in, assuming we get the things that Trump's looking for, which is, for example, Americans are able to invest into Bitcoin, Ethereum, ETFs, DATs, etc., through their 401ks. Assuming we get all of those things, there's going to be a massive cohort of Americans who maybe they wouldn't have ever downloaded Coinbase and made an account and bought a Bitcoin that way, but they'll do it more passively. They'll do it through their brokerage account. They'll do it through their broker himself. They'll do it through an ETF that holds a basket of different assets, including some Bitcoin, Ethereum, etc. And so ultimately, I don't know if it matters that much that people are sitting around and hearing and talking about sports, as long as they're getting some sort of passive exposure to Bitcoin and crypto. Again, that's how we get to the $1 million Bitcoin that I'm looking at by 2035.
Well said. Now, we've been on the record calling for a interest rate cut coming January 27th. This morning, Crypto Amaru wavering a little bit. He thinks the things that we talked about, the headwinds that we talked about yesterday that could potentially stop that from happening, are in fact going to be strong enough to keep interest rates not rising, but just keep them pat for another month or two. Well, here is a post, and what's interesting is you actually shared this post with me, and it's contradicting everything you're saying. They're saying that actually Powell is trapped, and he has to cut rates. Well, let's just read this, and we'll see what happens. At the end of the day, it doesn't really matter. The trend is still your friend. Interest rates will be going down, whether it's this month, next month, March, May, doesn't matter. Interest rates will continue to go down. Inflation is going down. Gas is down. Illegal immigration is down. Everything is down except for stock prices, precious metal prices, and even Bitcoin, if you zoom out for the year, is up. So everything's looking good. But let's see what's going on here. Fed Chair Jerome Powell is in huge trouble. He's trapped, and here's why. Just now, U.S. CPI came in line with expectations at 2.7%, while core CPI came in lower than expected at 2.6%. This is the exact number that came in during the last CPI print, which means CPI is not running hot. And this could be a problem for Too-Late Powell. Powell has been holding rates because the Fed thinks inflation will go up. But instead of that, CPI and core CPI are moving toward the Fed's target. As Truflation, which calculates CPI in real time, is showing, the U.S. inflation is now below 1.8%. This means the Fed is late in cutting rates, and this is a bad thing. The economy is already in distress due to high rates, and the Fed is still pausing rate cuts despite low CPI print. As we all know, the Fed did a 50 BPS rate cut cut right before the 2024 election, political, even though the markets were expecting 0.25 BPS. But then core CPI was 3.3%, while the unemployment rate was 4.1%. Powell, I thought you did what was right for the American people. You didn't play politics. These numbers aren't adding up. Today, core CPI is at 2.6%, and the unemployment rate has surged to 4.4%. Low inflation, high unemployment, cut the rates. And I think Trump administration knew about the CPI data, and that's why they're going after Powell. Powell can say anything he wants, but the reality is the Fed is way behind the curve. The market needs more rate cuts, and Fed will have to deliver in 2026. He doesn't really have to deliver because he's going to get replaced in May, so he could just collect paychecks the next 4 months and move on with his life.
He doesn't have to deliver because he could be a stubborn son of a bitch, dig in his heels, act politically perhaps, and try to stymie what Trump is doing with the economy. And I think there is a cohort of governors on the FOMC committee who that is their position. They do not like Trump. They do not like tariffs. They do not like his policies. And they're doing what they can to stop it. And so while I agree with every single point that Crypto Rover made in this post, I still think there's enough Fed governors who are basically political and anti-Trump, and that's why they're not going to cut the rates. The big thing about the CPI, the reason why the CPI data from today has also led me to believe that is we're still above the 2%. I mean, that's the argument that the hawkish governors have made over and over and over, which is that we are above our 2% target. And up until we are below that or at it, we want to keep the rates elevated because we don't not want inflation to come roaring back, and we think it's still too high as it is. So if we came in at below expectations today, I would have said, you know what, I think they are going to ultimately cut because the economy, the labor market's looking a little bit weak. We only created, I think, 50,000 jobs last month. Probably going to be revised downward. Unemployment is pretty high at 4.4%. I think they didn't want it to go any higher than 4.5, so they're right at the edge of that. But then you have this CPI data that's coming in 2.7. I know it's not higher than it was, but it's also not lower than it was. And so I just think, yeah, there's enough of these hawkish political governors out here that they're going to just dig in their heels, especially now with the this quote, criminal prosecution that may be coming down. I don't think it is, by the way. I think that was also Fugazi. But regardless, I just don't. I've lost faith in the Fed at this point, and so that's why I'm just saying I think they're going to just do the wrong thing.
It's interesting because you're saying they need the less than 2%, and they're at 2.6 right now, trending in the right direction. With Truflation saying 1.8, they did a 50 basis point cut when inflation was at 3.3% right before the election. So that's why when I watch the videos and I think about the Fed and he's telling you he's not political and it makes no sense because your mandate was the exact same. Your mandate was below 2%, and you did a 50 basis point cut, which we haven't seen yet. We've seen 3.25s when it was 3.3%. Not only that, we have unemployment at 4.4. You did that when unemployment was at 4.1. So the exact opposite, a much worse scenario, and you were dovish than where we are now for where you should be dovish here, and now you're hawkish. So I just think when you look at the numbers and then you look at what they're saying, those things don't add up. And it's really what I've been saying for a long time, that the Powell is very political. The Fed is acting very political. And that is human nature, guys. I'm not saying it's a bad thing. It's a good thing. It's human nature. But when you work in that kind of power, it needs to be based off math. Nothing else but math. I look at a spreadsheet. I ask AI. You run your Google macros. You run your Excel macros, whatever it is. And whatever the output is, that should be the result. It shouldn't even be votes. It should just be math. That's how the Fed should run its system. Putting human intervention on numbers is always a bad idea, especially now, the past 12 years, where everything is so political, so divisive, and so polar when it comes to mainstream media and everything else.
Especially when the numbers are so backwards looking, right? Like, we're always looking at data that's 1 to 2 months old as it is. So, obviously, the Fed could use an overhaul. The system could use an overhaul. I was, going on Twitter yesterday, as I like to do, and I saw a lot of takes, this is, we got to abolish the Fed. Let's get rid of the Fed. And I'm okay, sure. I mean, a lot of things should be different, but that's not happening, guys. The Fed isn't going anywhere. They're not going to abolish the Fed. This is the system that we have. This is like the people that rail against I can't believe they're printing money. It's like, dude, this is the system that we live in. You don't have to like it, but you have to adapt to it. And so understand how the Fed operates. Understand they are going to end up printing. They are going to end up restarting QE at some point. Understand the trends and the directions that the inflation numbers are going in, that the labor market's going in. Understand that Trump wants to replace Powell with a dove. It's all going to be fine, guys. It's all going to end up being fine. But this whole let's abolish the Fed and let's do this, that, the other crazy thing, that ain't happening, guys. So just adapt to the system, and it's all going to be fine. It's all going to be fine.
Do you guys have any questions, comments, concerns? It looks like we are seeing the chat box from YouTube only, so those are you on Twitter or Facebook. Sorry, we can't see those. But let us know if there's anything you want us to look at. We have looked at Bitcoin, Ethereum, Solana, BMNR. We talked about the NYC scam. Don't touch it. We talked about your mom rotation yesterday in the live show. Told you to buy. It's up 5% since then. What else do we got going on? I'll pull up. Looks like Pulse Chain is flat for the day. Inc is up 2%. Everything else is flat, so not much to talk about on Pulse Chain either. Surf Token flat for the day, giving up some gains. What else is there?
Here's a contrarian thought that I just want to talk about for a minute. So, we've been going on, many analysts, crypto, stock market, have been going on for a long time about we need lower rates for risk assets to pump. But what was interesting, and by the way, that probably did apply to the stock market. Stock market's at all-time highs. But what's been interesting with crypto is it's almost behaving completely outside of and disconnected from the rest of the markets for the past 2 or 3 months. And so if we continue to assume that crypto is almost separate and apart from the rest of the markets for whatever reason, maybe manipulation, maybe something else, who knows, then perhaps the Fed decision matters less and less. It hasn't mattered, right? The last 3 cuts hasn't done jack squat for the market. We went down most of the time. And only recently, since the beginning of this year, have we started to grind back up a little bit. So maybe there's a world in which the Fed decision doesn't even matter for crypto. I know it goes against everything that we've been taught to believe. and probably long term that's not correct, because eventually there's going to come a time when the low rates do sort of cause capital to move into the risk assets. But for the past 3 months, it hasn't mattered that they've cut the rates, has it, Nick?
Yeah, not really. I mean, there's always that delayed effect. It hasn't really correlated with Bitcoin. Obviously, we had the liquidity crisis, right, as rates were getting cut, so that kind of offset each other. But really, I still think you need easier money, cheaper liquidity, more liquidity to retail investors in order to get risk on assets to go up. But also lower rates helps the ISM, because that helps the businesses get capital to produce more revenue, and when ISM goes up, now you're looking at the business cycle. So I think it's all tied together, but it has not affected Bitcoin and Ethereum really in the positive light. We see, gold near all-time highs, silver near all-time highs. All the stock indices have gone to new all-time highs. And yeah, you had Bitcoin at 126 and Ethereum at 4,800, but ultimately that's not where they're at right now, and they never really had that same euphoria phase that we've seen in gold and silver.
What's interesting too is the run Bitcoin from 16,000, the low back in whatever it was, November 2022, up until the 126th K all-time high, was happening in the face of mostly quantitative tightening. We did get, a few rate cuts kind of towards the end of that, one random one right before Kamala was trying to get Kamala to win. Oh, they did one then, and they did like a couple others. But for the most part, it was very high rates. And yet we ran basically, 16K to 126. So it's just so interesting. I don't know what to make of it all.
I think that was less on monetary policy and more on speculation, because a lot of people speculated Trump was going to win. Trump was pro-crypto. You had Trump, J.D. Vance, all these guys at the Nashville Bitcoin conferences. I think that was less about policy and more about like, all right, let's sell a different asset. I know liquidity's tight and I know interest rates are high, but I got other assets I can sell, because it looks like Bitcoin and crypto are really going to have, America behind them and the government behind them. And that was true. We did go to new all-time highs. We did rally hard, and we were right that Trump was going to win. But ultimately, that got slowed down by the tariff FUD, and that has been slowed down by the ongoing QT that really just ended. We forget QT just ended last month. So I still think there's a delay here before we kind of see the normalcy play out here as liquidity gets easier to get.
Yeah, I think speculation surely played a role. I mean, the Trump trade, that was absolutely a thing. That's how he ran from like 75K to 100K, couple like last November, right after he won. But I actually think the bigger factor was the approval of the ETFs, and also the rise of the digital asset treasury companies, namely Strategy at this point, right? Those two sort of sectors or entities, whatever you want to call that. I mean, we're talking about billions, hundreds of billions of Bitcoin having been bought and held as a result of the DATs and the ETFs. So I just think there was a lot of latent demand for Bitcoin that wasn't entering the market up until they had those vehicles to do it, because it was more traditional investors. They weren't going to go on Coinbase or whatever. So I think that was really the big catalyst behind the run from 16K to 126. And I kind of go back to a point Tom Lee's made in the past. 95% of the Bitcoin's been mined or something like that, but only 5% of humanity owns it. So we got a long way to go, I think, before, I mean, God, if we can even just get 10% of humanity to own it over the next 10 years, I think we reach $1 million per coin. So we're early days. I saw another thing, Cycle Sailor. He's so great. He came out with a tweet saying something like, after electricity was invented, it took 30 years for factories to actually install and use electricity, which is such an obvious thing, right? Even electricity took 30 years to get adoption. Bitcoin's on year 16 of its existence, and the first 6 years was basically not even it wasn't even an industry. So maybe we're just 10 years into this experiment.
People get used to what they're doing. They don't want to take on the infrastructure risk, the financial risk, etc., until it's so easy and it makes so much sense. When the warehouses or manufacturing plants who took the risk probably had better results and better revenue for the money they put up front due to electricity being a thing. Less fire risk, longer hours, whatever it may be. I'm sure there's a lot of things that could benefit that, and that is a good comparison to what's going on with the Bitcoin for the monetary system. Talking about monetary systems, though, have you seen this? We know that Trump came out against Iran, and how do you cut off the heads of terrorists or a country? Well, you starve them out, and in this case, starving them financially, saying people can't do business with Iran. And what happened to the Iranian rial? It's gone nearly to zero against the U.S. dollars. If you have $879 in U.S. dollars and convert it to Iranian rials, it is worth 1 billion of those things. That is pretty crazy to see.
The best advertisement for Bitcoin is the failure of fiat currencies. We've seen this play out before, guys. We saw it happen actually, I think it was in 2014, when Cyprus, that economy imploded, and people there flooded into Bitcoin. That was back in 2014, guys. That was ages ago. We've seen it happen in Argentina. Argentina, for a long time, up until Milei did his reforms and kind of improved the economy there, was moving really to Bitcoin and USDT. I know this because one of the guys on our team, David, lives in Argentina. And he was telling us these things, right? That he does a lot of the economy was using USDT primarily, and then you have Iran blowing up here with the real, people flooding into Bitcoin. It was already popular in Iran apparently, as far as I understand. So anytime fiat fails, and fiats are going to continue to fail. Look at the performance of the U.S. dollar. Look at the performance of the Great British Pound, down 99% over the past 200 years. Every fiat currency fails eventually. And every time it happens, the best advertisement for Bitcoin, especially, by the way, too, because you might say, well, Crypto Amaru, can't they just use USDT? And yeah, because it's less volatile, it's always pegged to $1, blah, blah, blah. Yeah, you can, up until, USDT Tether, the company, gets a call from Donald Trump's administration and says, freeze, that 500 billion. We just saw the Iranian whatever government Ayatollah. He just grabbed 500 million or whatever in Tether. Freeze it. You can freeze Tether, guys. They'll freeze your Tether if you're a fucking terrorist. You can't. No one freezing your Bitcoin. So again, the best advertisement for Bitcoin is the failure of fiat. And so I'm not rooting for like people to be in misery and stuff there in Iran, but um, you know, this is I think going to continue to be a trend as we see Trump sort of taking out dictators and stuff around the world. What else we got?
Scrolling the Twitter feed, and that's about all we got today, I think. No more questions coming in. Hexbull updated his bear target on Bitcoin from 40,000 up to 45,000, saying
He's getting bullish.
He says we're about to rally here off the back of the Clarity Act, get to whatever is 110, and then dump out to 45K. 4-year cyclists are right, and we continue in the doldrum for the next year or two.
What's going to cause that kind of crash? I mean, that's just a tremendous amount of selling and like no buying.
I guess the assumption would be that stocks top out, gold top, everything tops out, everything sells off, and Bitcoin's going to get dragged with it. But if you're talking about precious metals, we want them to sell off because historically when they sell off, Bitcoin does good. Now, you could argue if NASDAQ dumps out in a big way that it will drag Bitcoin too. We saw that with the tariff FUD. But again, that would have to be some kind of black swan because everything that is happening, all the data, inflation going down, we hammer all these things. These all affect the stock market, and they're all in favor of bullish outcomes for traditional markets.
Yeah, let's set aside the possibility of a black swan. Like if China invades Taiwan, if the U.S. Actually, even if the U.S. attacks Iran, that's not going to do anything. Didn't do anything the last time we blew up the nuclear facilities there. I don't know. Whatever black swan you can envision, it'd have to be a really bad one to cause all the markets to crash like 50%. Bitcoin to crash 50%. So I don't think that happens. I think if you're talking about a crash, before you get a crash, you have to have had the euphoria, the blow off top. You have to have had the QE, right? Causing the markets to pump. And then inflation comes back. And the Fed says, whoa. Well, look at these, holy smokes, we're 5% inflation, 6%, 9%. We hit 9%, remember, after COVID. We hit 9% inflation. And that's when the Fed said, we're yanking the rug from the economy, and we're going to drastically ramp up the rates. And that sucked a bunch of money out of the economy and out of the financial markets and that's what helped cause, in addition to FTX and Terra Luna, et cetera, cause that crash down to 16,000 from the 69K. It was the Fed tightening that did it. But they didn't tighten for no reason. They tightened because inflation. But guys, we got inflation trending down. We just went through QT. QT just ended a month ago. So I don't understand how we could go through this whole thing again so quick. Like, we got to get to the point of the pumping and the QE and the markets going up before we can have another crash. That didn't happen yet. That didn't happen, at least to my estimation. So look, could we be wrong? Sure. I just don't think things are going to play out as quickly as they have in previous cycles. This has been the cycle of slow, very slow progress and moves and everything. Consolidation's taking like 3 months. So everything's going slow. I don't think we're going to get these quick, like, it's going to run to 110 and then crash to 45 in like a month. It just doesn't make sense.
Talking about progress, we got Spin here. Spin Pump, a pump fund token in the GambleFi sector that we started talking about here a few days back. Around, 0.00059. Yesterday we talked about it again around 7.6, and today it's up to 8.4. So, shout out to the people who are taking a look at this, finding some interest in it. Another 2% gainer on the 24-hour. It is a micro cap. It is on Solana. But so far, they've done well. They bonded almost instantly, and they've had this slow grind higher. A lot of the pump funds that bond, they do this, and it looks like the NYC token, and does this and goes to zero. This one has not done that, and is continuing to hold higher levels, and we've talked about it twice now, and it is higher from both areas. So shout out to you if you got involved. Shout out to the gains that you're getting, even in the doldrums. And this is kind of the first microcap play that the Surf DAO has been told about in quite a while. If you want these kind of plays, go buy 200,000 Surf for like $500 on Pulse Chain. You won't regret it. You earn more Surf for holding. Surf gets burnt out of total supply forever based on volume, and then you get access to a private community, alpha groups, pre-sale opportunities, and etc. And if you think we're right that the bull market is continuing, well, the alpha that you're going to get there is going to more than pay for itself, and that $500 is going to rapidly turn into a 2x, 5x, and 10x as Pulse Chain rises from the ashes.
Yeah, I want to talk about Spin Farm for a second, too. I mean, this is not just a meme coin. People are watching the stream like, just a meme. No. This is actual, like, utility play. how this project works. They have a product. Every time you buy the spin token, whether on the DEX or even through their website, you earn the right to play the game. And how the game works is you just go on and do a little casino, a little like spin the roulette wheel, so to speak. And if you win more spin tokens. You don't have to wager your spin tokens, by the way, to win. You just have to buy, and that, or it kind of earns you like tickets in a sense to play the game. So there's built-in utility, there's built-in supply control. 60% of the supply is locked and allocated for these rewards over time. So this isn't just a meme. This is a real product with real token utility. Does that mean it's guaranteed to do extremely well? No, it does not. Nothing's guaranteed. But I like when you see a product and some utility sitting at an $80,000 market cap.
I do agree. So I just want to touch base on that before we ended the live show as well.
Absolutely. In fact, we have a call with their team in a little bit. I know they're trying to push it. They're trying to get in front of more eyeballs, so we're going to do what we can to help them out with that as well. We know a lot of our community has bought into Spin. We want to see it do well. We have a bag as well, full disclosure. So we're going to continue to help them out on their journey. Got a call with them in an hour or two. So yeah, we're back to the grind, back to the trenches. Let's see how Bitcoin ends up performing over the next day or two. Ethereum, Solana, everything's looking a little bit green, which we love to see that. So hopefully you guys are feeling good. Appreciate anyone joining in to the stream, listening live. Get in the Telegram chat. Hit us up. Let us know if you got any questions. Otherwise, we'll be back tomorrow. And until then, see you on the beach.